Round 6 of NAFTA negotiations are officially done, and two potential issues have bubbled to the surface. The first is trade wars, and the second, a NAFTA exit. My guest says what matters now is that the market is waking up to the idea that the next thing on President Trump's agenda is trade. Joining us again is Brittany Baumann from TD Securities. Thanks for being here.
Hi, thanks for having me.
I just want you to know that every time we get questions or people asking to have you on the show, I describe you as our doctor because you have your PhD of NAFTA. So I want to kick things off. Tell us a little bit about what developed since you were last here. So what happened in round 6? And you had given us an implicit deadline of March. So we're about a month away. You don't think a trade war is coming, but you do talk about President Trump's agenda or his America First message and how that's actually changing trade policy. So what's happening there?
So I think there's been several important trade-related events in recent weeks. First, of course, the ongoing risk of the NAFTA renegotiations. We just wrapped up the 6th round, as you mentioned, and in our view, it did end up on a more positive note. We were a bit surprised by that, actually. And so what we have been wanting to see is that Canada and Mexico will be offering counter proposals to the existing U.S. proposals, which are rather draconian. And they did just that, specifically for rules of origin. And then secondly, the U.S. Trade Representative Lighthizer, in his closing remarks at the end of the talks, did offer a more conciliatory open tone, which we did want to see as well. So going forward, we have the next round scheduled now for the end of February, so that was also a good sign. What still remains unclear is how the U.S. is actually going to respond to Canada and Mexico's counteroffers. So still uncertain how exactly they are going to concede, which we think is key for NAFTA to actually be renegotiated by the end of March. But in our view, still possible that that can happen. Now, secondly, kind of the next set of events were related to trade-related risks outside of NAFTA. And so these are the tariffs that President Trump decided to impose on solar panels and washing machines. Now, a decision was expected in recent weeks, and in general, this has been a long-standing dispute that was requested by specific companies several years ago under the Obama administration. And what we did see now is that the U.S. did reaffirm its protectionist stance by actually implementing these tariffs, and they are implemented globally, specifically targeting Asia, particularly China, because that's where the bulk of imports come from.
Now, you had created this trade risk timeline in your report, and we'll bring that up on the screen, but you identified two big things for 2018. What are you watching? Our view is that the recent tariffs that were just imposed are not going to spark a global trade war. So good news. That's good news. Like I said, it was a long-standing dispute. However, what we want to watch for is additional actions that the president might take. And these are specifically tariffs on steel and aluminum. There is an ongoing investigation. It likely found harm from other countries' imports on domestic U.S. industries. So Trump has to decide by April whether to actually impose tariffs on these products. The other issue is this ongoing U.S. investigation on Chinese intellectual property, whether or not China committed unfair trade practices for that specific area. And so if these actions, if the U.S. does take action in the form of tariffs or quotas on these specific areas related to trade, we think that is something that could spark a trade war, meaning could spark retaliation by other countries. So it doesn't sound like your view has changed in a big way, but I do want to ask you, investors are very optimistic right now. We closed out January and U.S. markets had hit record highs. What do you think these risks related to trade could do to either risk sentiment or risk appetite?
So that's an interesting question. Now, history tells us that U.S. protectionism is actually negative to global risk sentiment and therefore negative to the U.S. dollar. And the main channel is that U.S. tariffs would, in general, given that they're negative to economic activity, they're negative to risk sentiment, and therefore a benefit to reserve currencies like euro, like yen, even pound. So that is something to watch going forward, is whether these trade actions will be imposed, because in general we think that would be negative broadly to the US dollar, and in general might have already contributed to the past dollar depreciation we've been seeing.
In terms of bringing that a little closer to home, what do you think that could mean for the loonie, the Canadian dollar? A trade policy change means good, bad news?
So in general, when a country imposes tariffs, that would actually lead to an appreciation in the currency, because it diverts away demand for import competing products and therefore less demand for the foreign currency. So for the loonie in particular, we think that currency is going to be more sensitive to NAFTA risks going forward, and therefore probably see a negative contribution from any kind of blow up in trade risks that are related to NAFTA. We did see the currency show its colors a few weeks ago when there was greater concern that Trump might pull out. And I think that's the key risk to watch, is if President Trump actually pulls the trigger and invokes Article 2205, which would be a 6-month notice of withdrawal, not binding, that is, but would probably lead to a weakening in the loonie of as much as 10 to 15%. The currency would certainly overshoot in that kind of an event. Our view is that that risk is still alive, but if it does get invoked, if Article 22.5 is triggered, we still think that NAFTA would eventually be renegotiated within 6 months' time.
Brittany, thank you very much. It's always great to have you here.
Great seeing you. Thanks again.